Good morning, everybody. I hope everybody is doing well. I hope everybody is well rested ahead of the US CPI later on today. I don't know exactly who is with me from our
Good
team.
morning.
Hey,
I'm
Phil.
here.
The ghost of Ryan is with you.
So who's there? So I've got Stelios, I've got Steve.
You
That's
have the two sexiest Greeks on the planet. What else do you need?
All right, I'll let that for the ladies to judge, you know. Are we the three of us then, or is anyone else joining? I'm not sure.
I think that's the three of us, and I don't know how long Steve will be here for, but it's going to be me and you, my friend.
Okay, great. Steve, let us know when you need to go, or so I can grab your thoughts quickly before you shoot. Okay.
I'm gonna be here with you. Don't worry about it.
Okay.
All right, lovely.
I was just saying because he's on holidays, he might hit the pool or something.
Yeah,
I'm on holidays, but who wants to hit the pool at 12:30 at noon when you have it for the whole day and the sea as well?
Dedication,
True.
Dedication. All right, let's quickly, because this is going to be a really quick one, run over what's happened last night and so far. There's not really a lot that happened, but let's see. So we had, well, first of all, we had Bullard coming out, was it yesterday, later in the evening, saying that he sees the interest rates moving up to 4%. He's a hawk. So there's no real surprise there. The 3-year note drew 3.20%, which is about it's trading a couple of BPs lower, but which is about where it was. We had a bit of a surprise bigger build in the API stocks, which pulled the oils a tad lower, but really nothing to write home about. Japanese PPI remaining relatively high, coming off just slightly, but still hanging up in the 8%. Chinese CPI, well,
that was a big news. That was a big news, in my opinion.
The Chinese CPI?
Yeah, I mean, hold on, let me have a look.
It came out 2.7% versus prior 2.5%.
Sorry, yes, it was below expectations, but PPI was
PPI, yes, that was
big drop.
Yeah, PPI lowest since 2020, right?
Yes.
If only we could rely on that data, it would be wonderful.
That's a good point.
Yeah. That is indeed if we can rely on Chinese data. But anyway,
but to be frank, in any case, you know, I've been for years a big inflation is coming back proponent, but I do think that, and I've been saying it now for several weeks, I do think that we're probably going to see globally some type of a pullback in CPI. Not a big one, but I do think it's likely to sooner rather than later see some kind of a pullback.
Yeah. Well, and we'll come to the US CPI later on, because I don't disagree with you at all on that one. So the rest is going to be the Swedish IP pass. We have to note, though, that, and I'll show it later on a chart, that Euro Stocky has been slipping and sliding. Sweden has been coming back a bit from the abyss. German final CPI, as expected, as kind of what, I mean, it's Germany. Germany is probably one of the most reliable ones when they predict their own data. So it came out as expected, remains uncomfortably high, but it's still the final reading for July. Norway coming in hot. Norwegian krona has been strengthening a little bit on the back of it. It's about 0.5% stronger against the euro, and then a bit stronger still against the dollar this morning. Italian CPI for once coming in line with expectations. And the Greek industrial production, and I'm so happy to have you guys with me. Have you seen that Greek industrial production year on year ramping higher? You guys are so hot.
I have no idea why that's happening or how dependable this number is, but yeah, I like it.
Yeah.
I was surprised to find out that we produce something industrially.
Right. Okay.
No, I'm joking, right? I know people that actually own factories, etc. Of course, Greece is not famous for its industrial production, to be honest, but we do have some industries, and some of them are actually rather healthy.
Yeah, it must be while you attract a lot of holiday makers again, you must be producing, I don't know, some sun loungers and parasols for the beach. So that's ramping
actually,
up
believe it or
industrial
not, we
production.
even have some heavy industry. We do have a couple of companies that produce things like cement,
Yeah.
like aluminum or aluminium, depending. Greeks, sorry, right? And we, to be honest, and we even have multinational companies that do that. Greek multinational companies that produce both in Greece and outside.
Mm. All right, and you guys have a huge shipping industry, right?
Yes.
Yes. Greece, despite its size, it's one of the biggest shipping,
Yeah.
commercial shipping forces in the world. The only reason why we manage to maintain such a healthy shipping industry is simply because you cannot overtax the shipping industry, simply because they can easily just move out and you get nothing in return.
Yeah, changing your ship's flag is one of the easiest things.
Exactly.
Yeah.
So if you try to do the same to the shipping industry as we and other countries have done to other industries, they're simply going to be like, okay, thank you very much, but we cannot keep on doing business, locally. We'll just take our ships elsewhere, and that would be.
Yeah. All right. Thank you for all that. Then for what's going to happen later today. Well, first of all, a little one in between. This mortgage market has been yo-yoing a bit of late. The last couple of data came in a little bit higher than the prior one, but for today, of course, the main focus will be on this block, which is the US CPI. So. The market is expecting for it to at least show some form of a setback on the headline, although the core stripping out oil, etc., may be coming in a little bit hot again. So likely Fed is watching both of them, but they try to hide behind the core. If the core indeed comes out at least as it was before, or showing 6%. Shouldn't be changing anything in the Fed. As long as the headline doesn't drop like a stone, but it's going to be volatile as the energy and the commodities market have been pretty volatile over the past month and couple of months. So we might see some numbers coming out there a little bit out of line with the expectations. But assuming that we get what's on the expectation calendar, we might actually be in for a bit of a disappointment on moves in dollar pairs. This being said, the market, as we were talking about it yesterday already, it seems the market really wants to price a slowdown in the CPI numbers. Seems the market is a bit desperate for it to start to come off again, and the Fed starting to change tack. The thing to me is that as long as we are staying even above 8% on the headline and close to this 6 or 5.5–6% in the core, I don't think Fed is ready to pivot yet, because it's going to be still a lot above their expectations and what they are planning to achieve. Just before giving the opinion word to Stephen and Stel, in my opinion, those earnings are a bit of important as well, because the consumer, if he can't pay for the high CPI, that may raise a few eyebrows on the Fed side as well. So I wouldn't completely discard the real earnings number, although it's been a tad volatile, but keep a distant eye on that. So guys, tell me, what's your thoughts? Let's start with Stel.
Yeah, I'm not sure. You know, what you said makes sense, but I personally think if we see, yes, we're expecting a drop in the CPI. Okay, we're expecting from 9.1 down to 8.7. If we see a drop of, even if we go to 8.8 or 8.9, if it's still lower than the last print, I think the market's going to be happy about it. The Fed is definitely going to be happy about it. So I think the market is going to be, I think we're probably going to see a market rally, even if we miss to the upside, but still we're lower on the previous print. That's just my feeling, that the market will probably think, okay, maybe we've turned the corner here. Yes, we didn't drop 0.4% or whatever, but we still dropped 0.1 or 0.2 or whatever. I think the main thing that the market wants to see in order to be happy and to see more risk on is for inflation to show signs of reversal. It doesn't have to be a big one, in my opinion. Maybe I'm wrong. It's just the feeling I get from this expectation. So as I said, even if we get 8.8 or 8.9, I still think the market is going to like that, and they're going to we're going to get a risk on and continuation of the last few days move. I don't think this is right, because I still think that the inflation is going to stay high for a while longer. But I'm just saying this will probably be the reaction. The initial reaction.
Okay. Steve?
I don't disagree with Stelios at all. I think that's a likely outcome having to do with a market reaction. I also don't agree with it. I think the market is illogical in many aspects very frequently, but it doesn't really matter, because as traders, we have to trade around, the market's perception, right? It's not about, it's one thing having a strong opinion about direction.
Are we losing you, man?
Yeah, sorry, it's not much I can do about it. I mean, I'm assuming my connection won't be always very, very stable. Because I'm using 5G, for safety reasons.
Okay.
But in any case, I do think that the market might take respite on lowering of the headline number of CPI. So I do agree with Stelios.
Okay, so yeah, what I think is that the market is already trying, as I said, trying to trade it. And you're talking about risk on. When people talk about risk these days, most of the time we talk about stuff like the stock market, be the S&P, the Nasdaq. They might enjoy, or they will likely enjoy a lower print. But I'll show stuff a little bit later when I take the when I'm going to have a look at the charts. That we are seeing the same kind of pattern, and already the market is already trading it in emerging markets and carry trades, for instance. And I think that's in the FX sphere. That's those are the ones that they're likely to move the most on any change in what's happening in the CPI environment.
Speaking of which, Cohen, I forgot to mention something. I said that I agree with Stelios that it's more likely to have some kind of a happy market environment if we do see a pullback in the CPI, which is likely. But what I forgot to mention is that I'm even more sure about the opposite, right? If for some reason unexpectedly the CPI comes in as strong as it was the previous time, or even stronger, I think that's going to be a big shock for the markets.
Yeah.
Right. And not a good one. You know what I mean?
Yeah, I couldn't agree more. And then we probably see Nasdaq take a solid dive.
Yes. And the dollar, having another leg higher, etc.
Yeah.
Yes.
Absolutely. So that about for the CPI. I'll show on the charts what I'm looking at to trade a little bit later, or at least what the expectations might be according to different outcomes. All right, so yesterday, just the next one are the crude inventories. Later on today, it's going to be overshadowed by all things CPI, of course, but they are expected to show a little build and a little rebalance again between the crude and distillates. We've seen that, and gasoline, we've seen that many times, but according to API, we might get a bigger build for those inventories. And then later on today, interesting after the CPI will be the 10-year auction in the US. That's 6 p.m. London time, 5 p.m. GMT. So keep an eye on that one. It's supposed to be about 20 odd BPs lower. Today we are trading around 276% right now on the 10s. So keep an eye on that. That may show us what the rates market, or at least what the bond market would like to see or like to do going forward with those auctions. And that is it. What CPI is concerned, guys. Do you want to say, or do you have anything else you want to talk about before I move on to the charts?
For me, not really. As you said, it's been very quiet overnight. Not much to report ahead of the CPI. Just one interesting thing that I read about. Did you hear that Elon Musk sold $7 billion worth of Tesla?
Yeah.
Only a couple of months after he said, "Oh, I'm not going to sell any more stock," and now he's saying, "Oh, maybe if this Twitter thing goes forward, I don't want to be forced. I don't want to be selling at the last minute." And he's making every excuse, but he's getting rid of his stocks.
I think Elon Musk is is a brilliant guy. There's no question about it. But in my opinion, he's as shady as shit in many things, right? And he clearly also enjoys the manipulating, the public, B, the markets, in my opinion, and C, so far at least, he seems to also be enjoying some kind of immunity on all aspects, right? I think the more he's pushing his luck, the likelier it is that the roosts are going to come home to
And he's getting away with a lot of stuff, right?
Yes, and I don't think this can continue forever, right?
Mm.
And since Tesla is Elon Musk, right? That's it. I mean, it's one of the companies that, in essence, it's one person, right? I mean, everybody knows, and those that do trust Elon Musk. So the fates of Tesla and the rest of the companies are, really intertwined with the fates of Elon Musk. That would be an extra reason I would be extremely skeptical owning any of the stuff he's involved in.
Mm.
Yeah,
I agree on that one. Right. Okay, shall I move on to a few pictures?
sure.
All right, then. Well, let's start with the metals for this one, because it seems that, and at least according to people who are trading it and who have a lot of opinion about it, gold has been the new, or not the new, but the renewed inflation trade, or the expectations for a peak in inflation lately. So this thing has been from the big support that we were talked about so many times. It's been rallying in, and then on the shorter term at least, breaking through a few levels here in the 17.
I don't think we've broken out, Cayman. I think you're looking at a less important trend line than the one you should be looking at the moment.
Which is
zoom out.
This one?
Yes.
Yeah, but
yes.
This one I have it on the this one.
This one, yes.
Right, nice one. Thanks, Steve. Yeah,
My pleasure.
So I mean, it is in an attempt to break out after all.
Yes, but you know, I always like to give it a little bit more space. You know what I mean?
Absolutely. Absolutely. Well, that's very nice. Thanks for that, Steve. I really missed that one. Right. That's really cool. Yeah. Okay. So that makes me rethink this a bit, but not too much anyway. So according to this trend line, then we are trying, but the level I'm really watching is that where we stopped again yesterday. And I have, and this is the move down from 1880s down to 1680s. We've got the 61.8 as well at 1800, call it 1804, and this is the 1804. I'm really watching for a confirmation of the continuation higher, and then I have this like big congestion zone here around the 2737. But with this fresh information, I think it's the close today below 1785 will be important enough. Just below there, I think those 70s that I spoke about before, we see a previous high here, a couple of lows here, is going to be relatively important as well for the moves today. Tree drive on gold. Yeah, I'm not really watching. As you can see, I don't have any RSI on my charts. But yeah,
anyhow,
thanks for that,
with
Steve.
CPI data coming out, definitely a very important day to watch gold and silver, right?
Yeah.
Yes.
Yeah. Silver as well. There's a couple of big levels there, and not in the least the one that's coming from the May bounce, and then over here, and we stopped right on it yesterday. So that's going to be one I'm watching. But then the longer term is far away, right? But anyway, on silver, perhaps gold might be the bigger mover, because we've seen the silver being a bit lagging, and I think one of the reasons is as well that we are missing a bit of infrastructure in the Biden Act. So we need good economic data to support a further move higher in silver. So I think this 20, call it around 65.70 is the gateway to 21. But to me, it really needs to break above this 21 again to get really going. And until then, I'm happy to sit on my long-term longs, on my small add-ons. But I took a slice off yesterday, just respecting the zone that we are in around here. Do you have anything else that you're watching on silver, Steve?
I'm still long.
Yeah.
I bought some. I actually told people here in the flow show, almost live. I because I bought it a little bit before the flow show that we had on Monday, right? So I bought some. If I remember right, my entry level was 1973 or something
around here.
Yeah, I bought it because I thought we were flagging. I told people that I did buy. Now, the only difference since then is that I've now moved my stop loss, because my initial stop loss was at 1895. That was my initial stop loss. I've already moved my stop loss now to 1950, below the recent low, below, in essence, the bull flag low. So now I've minimized my risk to, a negligible amount.
Yeah.
I'm going to be more than happy to see some kind of a surprise resilience in the CPI. I don't think that's the main case scenario, as I said before, but I do think that gold and silver are going to fly if either we see really strong CPI or the opposite. If we see a surprise lower, there is a chance that the market will think that the loosening of monetary policy might also be beneficial. It's a little bit weird because the market seems to be always having the wrong reaction having to do with gold and silver, meaning when inflation goes up, they're like, okay, central banks are going to now have to fix inflation, and that's going to be positive for real yields, and then they do the opposite sometimes. But in any case, I feel quite comfortable being in this trade because, you know, my risk reward now is amazing. I'm looking actually for 21.50. That's my initial target.
Okay, understood. Thanks. Anything to add, Stel?
Not really. I'm still long, as everybody
Yeah.
knows, and
We're all long.
I've taken a quarter off at what was it, plus 9% or something like that, which is really
around
nice. I
here,
mean,
right?
yeah, that move was at 2040. Yeah,
Yeah,
I've
around
moved my
here.
stop to my entry level, so I have very little stress about the trade.
Yeah.
If the CPI comes in strong, perversely, I think metals are going to drop. Because you know what's going to happen now, a hawkish Fed, they're going to be driving real yields higher. But, you know, inflation actually it will be bringing prices of everything higher, including silver, which is used everywhere. So that's that will be a gift, you know, if we can get below. I've got my bid to buy back that quarter that I sold at still at 1940. Maybe I'm going to bring it up a little bit towards that trend line.
Yeah, that's what I was saying this morning as well when I was updating the charts on the chat. That I wouldn't mind the market going like, all right, a high print, and here we go lower again. I wouldn't mind what I sold earlier, what I sold yesterday. I wouldn't mind buying it back a buck lower. So around 1960, I would be relatively happy to try and buy it again. You know.
Yeah, I think 1960 is probably the place to be, and I think I'm going to move my buy order to that level. I'm going to wait to see the reaction of the CPI first. No, I don't have any other comments. I think I'm very bullish on both gold and silver. I think they'll take some time to perform, but they you know, we started well with silver, so let's see how it goes.
Yeah, exactly. And the thing is as well, what Stel said is so important, right? I mean, that we can always trade the immediate reaction, but after data which the market think or take as very important, we should sit back a little bit and then look at the market reaction, look at what the correlations are doing. Like, for instance, if you want to say a high inflation is a bullish dollar, just look at what the rates market, the bond market is doing, and the rate market is thinking of it, because that is going to give you an idea about the viability of any move when you see the correlations come or go or stay stable. So don't rush into stuff. The market will still be there a few hours later and in the days and weeks to come as well. But anyway, this is our view on silver. First, before I go to let me do the majors first. I think traditionally the yen in the FX majors sphere is one that really moves on yields, especially on the 10s. We have seen quite a big volatility of late, and it may be that the market is just keeping it around 135 here, and then decide where to go next. I think this one, bit of an inverse head and shoulder, although I find it well, it is there. It is there. And what's interesting as well is that the neckline is coming in around this 134, 35, 40, which is relatively important to me as well. So that's going to be the first level that I'm watching on the dollar yen. And then here is the prior high at the earlier this week high around 135, 55, 60 was a low there as well. Bit of a traffic zone. So that's going to be the first level I'm watching. And then if I get a confirmation above 136, that would mean that the dollar is really ready to try and test it higher again. The 136, we can see it here as well. We can see it here. It's been the springboard for the last leg up to the 139. So interesting moves on the dollar yen, I think, to be expected. And therefore we look at the tens. If we get back and hold below this 272, 270 zone on the US tens, this has every chance to put another again about a 2 big figure move to the downside. If in turn it's the CPI both print higher, I think there's a fair chance to break this 135, 50, 60, go and have a look at least at 136. If we get back up there, then we are talking about this 137, 137 and a half zone again, at least in my opinion. So I think this could be a very clean mover post CPI. On the euro dollar, it's starting to get an old record, right? We tried, there was a smaller triangle as well. We tried to break it, but finally it's turning around the 102 and a quarter, in between the 102, 80, 90 on the tight, and then okay, in the really short term, 101 3/4 could act as a little bit of an intermediate support, but really it's about the 101 20 30, and then I would say the confirmation zones for the euro to see bigger moves than we might expect on the data. I think is to break back sub 100.95 or to break above 103 and a half, which we have been banging on about for weeks now. So any other levels that you guys are watching, or have I pretty much covered what the zones are?
Having to do with the euro, I don't disagree with you, and it is coiling and all that. But you know, my more broad comment having to do about the euro would be that you know, I just want to remind people that my approach in the markets is that I usually don't try to force myself into trading specific stuff, but keep a broad mind and look at the stuff that actually are moving more to trade, right? I mean, nobody forces us to trade the Euro USD that doesn't seem to be doing much, right? And there's no reason to, in essence, push yourself to trade something just because it's popular, just because it is, it has liquidity, because in any case, the vast majority of FX pairs have more than decent liquidity. You don't have liquidity issues that might cause you trouble in FX, right? Unless you start choosing like weird exotic, pairs, etc. So in my opinion, Euro USD might be, about to do something, but I'd rather trade stuff that seem to be on the move a lot more than it is.
Yeah, especially for the shorter term move, right? Euro dollar is really not my favorite instrument to trade over the data, to be honest, because we've also seen the European yields moving in tandem with the dollar yields, which is exactly causing this move. We've had the final leg of the dollar buying, euro suffering from the Ukraine whatever situation, but clearly since mid-July we are in a pattern which, in my opinion, unless we get really out of expectations data on either side of the pond, may actually continue for a while longer. And then even on a try, we may try to break out of a trend line, but then all of a sudden halt around 103 and a half again. Similar thing to the downside. We might break up this 101.30, but then unable to really sustain it sub 101. There are underlying reasons for that make euro dollar move, but the immediate reasons are a bit blurred, in my opinion.
Yeah, and in general, the euro, for good reasons, for good fundamentals reasons, have been for a long time in the defensive. So in my opinion, it's instead of trying to look for reversals with the euro, it's better if you're just looking for continuation to look for the euro to be a good vehicle about it, right? Simply because, why look to be long a currency that is overall weak, right? In general, it's nice to choose something that's strong against something that's weak, not something that's, for example, weak against something that you expect is going to be somewhat weaker.
Yeah, I'd rather trade euro through the crosses, to be honest, right now,
Exactly.
than
Exactly.
versus the dollar.
Exactly.
All right then. So moving on, I'm going to rush a little bit through the rest of the dollar pairs, but just a quick overlook. Cable has been respecting this short-term trend line for now. Since we had the start of the month of August, we have been forming this like really short-term trend line. So for people watching the immediate move, we are somewhere having this 120.105. It's trading 120.80. It's really too close for comfort on a data point like CPI. So I'm going to watch it a bit wider, and it's coming back to what I always thought was a very interesting zone in the cable, as we have seen in the past as well. It's been a case of stopping at this 121.55. 70 zone, and I really think that is going to be quite interesting to watch again before we talk about the 122.25, which should be the next important one to watch. On the downside, 120.25, and then that should be a hold or fold gateway to back below 120 if already the data warranted, which personally I'm small in doubt that we actually are going to see huge moves, but let's prepare for the worst, or prepare for a big move, even if we don't get those big moves again. So 120.25, I think, on the downside, because 120.65.70 is a bit close, even though it's been a few bottoms of late here. But that's a bit close on a data point, supposedly very important, probably the most important of the month, perhaps. Moving on to dollar yen, I've covered. The Canadian dollar, it's going to be very fast because I absolutely don't know what to do with it. I think Canada is much more interesting trading through crosses than through the dollar. Also because of the Canada, same as the mix, for instance, it's part of the Americas, and they might be moving up and down a little bit in tandem. So I'm going to leave the dollar Canada alone. But if for those desperate to trade it, watch 129.5, 129.50, 60 on the top side. I'd say 127, 128 the figure, and then the big one, 127, low 127s. But really, I'm gladly leaving this one alone, or people might rather range trade it than trying to look for breaks. And moving over,
once again, Kiwi. It's a very bad habit. Somebody trying to force a trade in any market.
Yeah.
Right. When I don't know what to do with something because the technicals are extremely messed up, I know exactly what to do about it. Skip it and look somewhere else.
Yeah, exactly. Absolutely, man. Absolutely. I couldn't agree more. The Kiwi looks a bit more interesting for those having an interest in the antipodians. Okay, we've seen this break, which has been roughly a sideways break, but then we have this little trend line coming, which has been broken. I think this, which is also here, we have a fib from a little while ago. So I think the 62.90 is going to be relatively important on the close today for those trading Kiwi. If we hold above 62.90, I think there may be another 70 to 90 points in the making here to have a look. Close to 64 the figure if you're into Kiwi. fail back through 62.90, that's probably going to give us 50, 60 points to the downside if you care to trade that. But it does, on the basis of what we have seen since mid-July, it does look relatively constructive.
Yeah, also the same thing.
Come again?
The same thing with the Aussie.
Aussie, relatively the same thing, although I have a problem with this trend line. I have a problem with it now. It's fresh, but I have a bit of an issue. To me, it's the big figure, right, today. So get a close above or below.
Today it's going to be an important day for everything. There's no question about it, right? Everything that's dollar denominated, big day today, no question about it. So yes, I couldn't disagree with that. But if you zoom in, right, the last leg higher in the Aussie, for example, that we've had, has quite a strong momentum to it.
This one.
The recent price action we've seen, the very, very recent price action we've seen here in the 4-hour chart, is, for the time being at least, looks like a small flag or pennant. Right?
This one. Yeah, okay.
No, it has a fractal nature. Even if you look shorter term.
Oh, this one.
Yes,
okay,
exactly.
Okay.
So it's both.
So you're really talking about a day, right?
And the very short term one, right? The one that's currently unfolding. That seems to be more corrective in nature. So, of course, yes, exactly.
Oh shit. Yeah, but I see what you mean. Yeah. This one. Yeah, this one. Okay. Yeah. Yeah, this one as well. And then even in the more medium term, you could argue there's another one in the making here. But that means that there would be a possibility to go all the way back down to 68.40 to confirm this flag. But it's true that like, let's call it 70, right? Today the close 70 is going to be important. I would though not discard this little zone, because we've had this spike higher and then it fell a bit short of those fibs around here. That's going to be, in my opinion, for the more medium term, a confirmation that Aussie is on its way to higher levels again, possibly back up to 73, the figure. If in turn we see a move lower, I see two supports here. One is coming in around 68.90. The other one is the bigger one is going to be 68.40. All right. So for those who think that the dollar is a sell-on rally, or you have confidence in what's happening on the antipodians, looking at copper and looking at the rest of the commodity sphere, 68.40.50 would be a nice level for you to look at if ever we get back down again in the Aussie. What else have I looked at? Oh yeah, okay. Let's look at a few of the emerging markets, because I think they are in a very, very interesting place. The emerging markets. So there's two things going on, in my opinion, in the emerging markets. One, you have the fact that the market is trying to trade a peak in inflation in the States or in the major economies, where the emerging market countries have been regularly hiking rates. They might actually, if the economies behave relatively well, or at least don't see a disaster, they have been benefiting from their high yield status, and things like MEX, Rand have been strengthening thanks to their very high their high interest rates, even compared to the dollar. So we have seen, first of all, a move back down in dollar MEX. We have broken through this resistance. Yesterday, we tried at one stage coming back here, and then we failed on the trend line. So this one is the first one interesting for me to watch. And then there's this horizontal level in dollar MEX, which is right here. If we get a close below 2020, I think a retest of 20 is really on the cards. But the second thing that I think, and it also has to do with rates, and it also has to do with the market perhaps thinking that recessions are going to be only technical of nature, is the comeback of the carry trades, and both are linked. But in my opinion, what we have seen lately, and especially after this spike that we saw in the beginning of the month, is that it seems to me that more medium-term players are really playing carry trades, and it's true against the yen, but also in parts against the euro. But let's first continue on the dollar side. So keep an eye on this 36.42 zone on the dollar max if ever we get a rebound on the CPI, and then watch a close above or below 2020 here. The dollar rand is in about the same place. We've had a similar kind of we were in this kind of upward channel, and then it's broken on when we broke back just yesterday below 1662, 65, and we are trying the next support zone around 1650. Right here we run it. I was talking about this yesterday, thinking that we would go into the CPIs rather around 1660 and tell you that 1662, 65 close above or below will be important for the day, but we are already on the next little support. So still keep this 62, 65, stretch it up to 68 in mind on the dollar rand for later on. But if we don't get any dollar buoyant high overshooting on the CPI today, I wouldn't be surprised if dollar rand puts it another % lower on the course of the day to come back into this traffic zone. So that for the dollar rand. Another one that I was looking, because Norwegian kroner with the CPI has been on the move again. So for the US CPI, let's take the dollar Norway. Let me put it maybe on the 4 hours. Right here. So we have had this move higher that we see from March, came back and then went up again, broke above, but rather quickly came back inside it, and we tested it again, broke quickly below, and then rebounded, and now we are back on the test. So this is around 970 in the dollar Norway. I would still pay attention or respect 960 for later on in the day, but 970 above, below on a close, and then 980 will be the next important little level. So we have about call it 2% to play in around the 970 pivot. So I think if we get a close below 960, we might be on our way back to 934. So if we get a close back, a break back above 980, it may all be over, and dollar Norway start to move higher again. That for the dollar side. On the euro side, it's to me painting a slightly different picture. We are trying to get back into this downward channel. And thanks to the higher CPI print, which is still 4% lower than what it is in the euro, but Norway to me still being better than Europe, as Europe needs Norway's oil and gas. I think this may be important if we stay below 995 now and call it perhaps 10 below. Which is a bit of a psychological level. It is possible that we are going back to revisit lower levels. If we get a confirmation below 980, then it might be lights out for euro NOK, and we go back another couple of %. What else? Is there anything else you guys want to look at?
Use the Turkish
No.
lira.
Come again?
Use the Turkish lira being defended at 18. Obviously, I mean it's a it's a shadow, defense from the Turkish central bank. But in my opinion, it remains in very big trouble.
Okay. Stephen, what do you mean they're playing carry trades? Carry trades is basically taking advantage of interest rate differentials, especially when you have bigger differentials. For instance, like the MEX is, which has now an interest rate of, I think, 7.5% or so, versus something like the euro or the yen, which are still hovering around zero. And as long as the economy, the global economies don't really collapse or show like really signs of weakness, the players try to take advantage of this kind of differential, because emerging markets, they are of course very sensitive to what the global economies are doing. So if the global economies would slow down, people tend to go back in more safe assets and move out of emerging markets. But for the time being, they seem to be quite happy to take advantage of what the interest rates differentials are doing.
Yeah, so basically you borrow a currency at near zero and you buy a currency that's yielding you 3, 4, 5, 6, 8, 10%, whatever.
Exactly.
Obviously, there's risk associated with the trade, obviously, but in the meantime you're collecting the carry.
Absolutely, and you bet on the carry to cover whatever the FX may cost you if the currencies are adversely impacted. Guys, for me, that's about it for today.
Yeah, that's been pretty comprehensive, I think, and we have the big event coming up in a couple of hours, so
exactly.
I think we're well prepared.
Yeah, just one last thing. Yesterday, I started to leg into a small Euro mix, just the start of a position, but I'm going to watch these 2080, 2090, 21 here, those levels to add to the positions, because especially that is my carry trade basically. I still like this thing to over time. I still think we have a possibility to get back to pre-COVID levels, just thanks to the interest rate differentials and also for as long as the global economies don't completely collapse. And that's it for me for today. Steve,
thank you, Cayman. It was great as always, and we'll see you all on Face.
Thanks to you guys for your company. It's always very, very nice to have a chat with you guys about everything. Thanks for the people listening to us. Don't forget to make publicity for us, guys. The more the merrier. The more we can interact with you, the better it is. And that's it for me. Adios. Trade safe.
Bye-bye.